Hello. United States Mint stops production of American Silver Eagles. Silver Doctors is reporting that a United States Mint authorized purchaser has told them that the U.S. Mint will stop making 2016 dated American Silver Eagles, citing lack of demand. Now, what gives? Silver price has been rising. We've all assumed, we've all been told that demand is also skyrocketing, and that's the reason for the price to be rising. That is not true. Physical gold and silver demand in 2016 has indeed been falling. Now we're going to go through in this podcast why that is. Now, Silver Doctors is reporting that they were told by a U.S. Mint authorized purchaser, which means one of the vice presidents of an authorized purchaser that purchases Silver Eagles directly from the U.S. Mint, was told by the Mint that there is lack of demand from the authorized purchasers and they're going to stop making 2016 American Silver Eagles. Now, we've heard, and there was actually one report saying that we would run out of silver in 2016 guaranteed. Well, it doesn't look that way, because what the mints did was very clever at the beginning of the year and during the middle part of the year. They allocated the American Silver Eagles to 1 million a week to the U.S. Mint's authorized purchasers. So the authorized purchasers bought 1 million a week of the American Silver Eagles, and they built up quite a stockpile. And the idea was the more they bought, the more they'd be in the good favor with the U.S. Mint, so they would always get the proper allocation. Remember, the higher they buy, the more they're entitled to buy. So they thought last year there had been a shortage, there had been record demand, and they didn't have any Silver Eagles. They figured they'd stock up this year and make sure that they had enough Silver Eagles on hand, so if the price rose, they'd be able to charge some higher premium. Well, it didn't work out that way, because they accumulated all of these American Silver Eagles, and when they removed the allocation and the U.S. Mint said you can buy whatever you want now, they stopped buying because they're loaded up. They don't need any more American Silver Eagles. So all of the record sales that we saw earlier in the year were not record retail sales. They were record sales of the U.S. Mint to its 12 or 13 authorized purchasers. These authorized purchasers purchased the 25, 26 million, 4 million a month allotment of American Silver Eagles, 25, 26 million through the first half of the year, but they've been unable to get rid of them, and that's where the lack of demand comes in. So what we have now is, and this was intentional in my opinion, the Canadian Mint said earlier in the year, after they released their first quarter sales numbers for silver, was that they had sold a record amount the year before and they were not going to get caught in a shortage situation again this year, so they had ramped up production, and they probably did the same thing. They sold record amounts to their authorized dealers. Well, the United States Mint did the same. The last thing they wanted was the attention that would come from a silver shortage, because when there's a shortage, people hear shortage, there's panic buying. And as I mentioned on a prior podcast at Rory Hall, the United States, none of the mints can afford or even have enough silver to supply if 1, 2, 3% of the American workforce, just the American workforce, forget the European or anywhere else, wanted to purchase silver, physical silver, in any meaningful amounts. So the last thing they want to hear is, they want to have out there in the media, is that there's a shortage, there's another record amount of silver being sold. So what they did was very clever. They front-end loaded the authorized purchasers. They purchased a lot of silver. Now they have an actual good negative story on their hands, because not only do they not have a shortage, they've averted a shortage. They now have a story that silver is plentiful. Demand is gone. We don't even have to make any more American Silver Eagles. There's nothing to see here. What drives the price of silver, for better for worse, is not the amount of coins that people buy. The coin and bar demand, silver and coin bar demand, has risen from about 5% of overall silver demand in 2005 to about 25%. So it does now have an influence on the physical supply demand dynamic, but it does not have an impact on the price. We saw all last year record sales, the year before record sales, the year before record sales at all the mints, 3 years running, and the price went down. Why? Sentiment was down. Why was sentiment down? People didn't like silver. During the time 2014 and 15, when supposed sentiment was down, physical buying was massive. We saw massive record buying on the Shanghai Gold Exchange. We saw over 2,600 tons being withdrawn on the Shanghai Gold Exchange. We saw record amounts of silver being imported into India. We saw the central banks of Russia and China adding tremendous amounts of gold. We saw the US Mint, Perth Mint, Canadian Mint, Austrian Mint also selling large amounts of silver and gold, and the price went down. Now this year the price went up and the physical demand has gone down. That is because investor demand and trader sentiment are what drive gold and silver prices, not the physical demand. Now that sounds counterintuitive, but that's the way it is. Look, when the big money moves into gold and silver, they move into paper gold and silver. They don't run down to the local coin shop and buy a few eagles or a few maples. They don't call up their online bullion dealer or place an order online. Now, there are large orders placed on online bullion dealers, don't get me wrong. But when I'm talking about the big money, I'm talking about hundreds of millions of dollars that are moved into gold and silver. That goes into COMEX futures contracts, gold and silver ETFs, which we've seen record inflows this year. And it goes into gold and silver mining shares. We saw with the Deutsche Bank portfolio and their investment managers massively increasing their gold and silver mining shares. We saw with the Swiss National Bank, who has not added any gold for years to its holdings as a Swiss National Bank. It's built up a $1 billion gold and silver mining share portfolio. So when the large buyers like Soros and Druckenmiller and Paul Singer and even Lord Rothschild move into gold, they don't stack. They don't put their gold and silver in a vault. Some of them do maybe, but the large investment managers have a mandate on how they invest, and they invest in the systems gold. They invest in GLD, SLV, mining shares. They trade futures. That's just the way it is. And because of the uncertainty created this year because of Brexit, negative interest rates, these big investors didn't suddenly become interested in silver eagles and maple leafs and coins and bars and silver shield. They buy gold in the form of paper contracts and ETFs, and that's what's driving the price up. And we can see here, gold ETF record increases during this time period right here. A very rapid increase from January to June, July, and even August. We see massive gold ETF demand. Now, whether the gold actually goes in there is irrelevant because it's perceived that it goes in there and the price rises accordingly. And when the price rises, your stackers, maybe they sit back. They don't buy. They're price sensitive, just like the Indians are, just like the Chinese are. Why buy when the price is high? They hold back. Or maybe they take some of their money and they see the silver mining shares moving up and they piggyback off of that increase. I mean, if you've been buying silver or gold in the physical form for all this time and losing money, and all of a sudden you see mining shares doubling, tripling, and quadrupling, maybe you take some of your spare money and put it in that. I don't know, but I don't know exactly what people do. But what I do know is that the silver and gold demand, physical gold demand, is down this year in just about any way you can measure it, but the price is up significantly, and I attribute that to the investment demand in the paper products. Also jewelry. Remember, gold jewelry is usually the largest component of gold demand, and gold, when jewelry gets too expensive, people hold off on buying it. Well, back to the silver, because that's what we're talking about. The U.S. Mint's stopping production of U.S. silver eagles because of lack of demand. And you can see a lot of that physical demand is substituted in the form of ETF demand. This year, we've got a nice increase from about 490 million ounces of silver in ETFs all the way up to about 600 million ounces in a very short period of time. The COMEX open interest is 40-50% higher this year than last year and is also at record levels. There's your silver and there's your gold open interest charts, courtesy of Nick Laird at Gold Charts or Us. Now, I'm not going to go through all the other indicators of physical gold and silver demand being down this year and the paper demand being up, but I am going to give you these links, and I'll put a link to at the bottom of the YouTube where you can then go to this blog post and check out these links for yourself. I post the information that I get from these sources each and every month, whether it's good data, bad data, I post it. I don't only cherry pick and then mention skyrocketing this and you gotta buy now or disaster. I try not to editorialize. I try to put the data out there, but the data is telling me this year physical demand is down and paper demand for gold and silver is up. For example, did two stories this year earlier this month on Deutsche Bank and how its investment managers have added large amounts of silver and gold mining shares to their portfolios, and also how the Swiss National Bank has built a $1 billion. This is a proprietary fund. This is owned by the Swiss National Bank. They own $1 billion worth of silver and gold mining shares. I've also been covering each and every month, and you can go to the archives here in these links, the amount of gold and silver that Russia Central Bank and China's Central Bank add to their gold reserves each month. These two banks are really the only banks of any significance that are adding gold to their portfolios. The Western central banks are just sitting on their gold, or they're not buying anymore, or they're trying to get some of it back from the New York Federal Reserve where it's been kept for safekeeping, such as Belgium, the Netherlands, and Germany have repatriated some of their gold. Venezuela, there's a whole list of them. But in any event, for those countries that are adding gold to their central bank, not talking about their country, so the People's Bank of China and the Russian Central Bank this year have slowed their gold purchases. Now, you could say the People's Bank of China isn't all of China's gold, and I understand that. I've written an article about that, where the People's Bank of China is just where the central bank keeps gold. That gold is at about 1,800 tons. Russia's at about 1,500 tons. Sure, there's other gold elsewhere in the country. That's not what we're talking about. We're talking about the amount of money that the gold that the People's Bank of China has decided to add to its reserves, just like Russia, has been lower this year in the last 6 months than it was in the prior 6 months. More importantly, if you go over to the Shanghai Gold Exchange, which many believe is considered a proxy for physical gold demand in China, it's down about 25% this year. Now, granted, last year was a record year, but this year it's lower, which highlights that lower physical demand is not what's making the price go high. Well, it's not making the price go higher, but higher physical demand isn't boosting the price higher, because we saw in 2015 with record physical gold demand in China and record silver demand in India and record coin sales in the major mints, we saw the price go lower. So people are price sensitive. The price has gone up. They buy less. They withdraw less gold from the Shanghai Gold Exchange. They import less gold from silver to India, less gold to India. And the central banks buy less. And we've seen American Silver Eagles will not set a record this year. Stackers are buying less this year. They stocked up for 2012, 13, and 14, and 15 when the price was lower. Now when Eagles are $22, $23 and the price seems to be going higher, people are holding back. Also in the links here we have India. I report monthly on the gold imports and silver imports into India. India does not have any mining production whatsoever for gold at all. I mean, there may be a little bit that I'm unaware of, and they have a very small silver mining production, so they import everything. And Indians love gold, and the Indian government hates that they love gold. So what do? They put taxes on it, they put import duties on it, and that is curbing gold demand imports into India. But the price is also not helping, because you can smuggle gold into India. I'm sure there's ways to do it, but the official data shows that gold imports, as a result of the import duty and the higher prices, are down significantly this year, up to 40-50% lower than last year. And there was a duty last year too. And there's also a 5% sales tax on gold jewelry for much of the industry that sells jewelry in India. Now, silver has no import duty restrictions, and there you're still seeing a decline this year over last year in the amount of silver imported into India. Why? I can only guess. It's the price. They got a lot last year when it was up. It's standard economics. When things are on sale, you buy more. When the price goes higher, you buy less. Now, in a giffen good, it's the other way around. Yes, that could be the case. If silver continues to go higher and gold continues to go higher, you will see Westerners jumping on board and buying physical metal. But right now, what Westerners are doing by jumping on board is jumping on board and buying gold and silver ETFs, gold and silver futures contracts, and gold and silver mining shares. So the higher price is driving the physical buyers out, and it's increasing the demand for paper gold and silver. Very simple. Also, if you look at the I've included the links to the U.S. Mint sales, the Perth Mint sales, and the Canadian Mint sales. Again, they're there every month. You can see them. Remember, they are authorized purchaser sales on the U.S. Mint, not retail sales. But you can still get a sense of how much gold and silver are being sold each month at the major mints. I publish it. I try not to editorialize it. So all this information is not just on Smaulgld, but it's online for you to look at. If you're interested in educating yourself and not just listening to people on podcasts like myself or two people talking to each other, you have to double check the information, not just check the links and see the information, consider where it comes from, consider the source, but you have to do your own research and understand what the dynamics are, what the physical demand is for silver to the best extent you can, what the physical demand for gold is, what the paper demands are, what's going on